An accounting information system is a structured framework used to collect, process, and store financial and accounting data. It integrates various processes within an organization to track and manage financial transactions, generate reports, ensure compliance, and aid in decision-making. Let's break it down in more detail. Key components of an accounting information system. 1. People are the users who interact with the system. The core data in an ICE consists of the financial transactions and information relevant to the business operations. This data includes things like sales, purchases, expenses, payroll, and so on. All data must be recorded accurately to ensure reliable financial reports. For software. The software component of an ICE is the system that processes and stores data. There are many types of accounting software, ranging from simple systems for small businesses to complex, integrated systems used by large corporations. Examples of popular accounting software include QuickBooks, SAP, Oracle, Financial Services, Microsoft Dynamics, G5. Information technology infrastructure. This includes the hardware that supports the software and ensures the system operates smoothly. It also covers cybersecurity measures to protect financial data from fraud, unauthorized access, and disasters. 6. Internal controls. Internal controls refer to the checks and balances in place to ensure data accuracy, prevent fraud, and guarantee compliance with laws and regulations. This includes authorization processes, audits, and security measures to prevent errors or fraudulent activity. 7. Outputs. Outputs refer to the financial statements and reports produced by the ICE. Common outputs include asterisk income statement, asterisk balance sheet cash flow statement, asterisk tax reports. Audit trails outputs are used by management, investors, creditors, and other stakeholders to make informed business decisions. Functions of an accounting information system. 1. Transaction processing. ICE is used to process and record financial transactions. These transactions could range from sales to purchases to payroll to expenses. These are categorized and stored in ledgers, which are then used to prepare financial reports. 2. Financial reporting. The ICE generates key reports that summarize the financial status of the company. Reports include the income statement, balance sheet, cash flow statement, and others. This helps business leaders, shareholders, and regulators understand the financial health of the organization. 3. Data storage and management. ICE stores vast amounts of data, and it must be organized in a way that makes it easy to retrieve. This includes ensuring that all transactions are properly documented and categorized, and that the data is stored in a secure, organized manner for future use. 4. Internal controls and compliance. The system must ensure that proper controls are in place to prevent fraud, errors, and ensure adherence to accounting principles. For example, segregation of duties and automated checks for errors are common controls. 5. Budgeting and forecasting. Many AI come with budgeting and forecasting modules that allow companies to project future revenues and expenses based on past trends. This is especially useful for management in making decisions related to expansion, cost control, and strategic planning. 6. Audit trail. Every time a financial transaction is entered into the system, it creates an audit trail, a log of who entered the data, when it was entered, and what was changed. This is essential for ensuring accountability and for auditing purposes. Types of eyes. There are different types of eyes based on the size, complexity, and industry of the organization. 1. Manual eyes. Before technology took over, accounting information systems were often manual. Companies would record transactions in books and ledgers while outdated. Now, some small businesses still rely on manual accounting. 2. Single entry system. This is a basic accounting system where each transaction is recorded once, usually in a cash book or journal. It's simple but lacks the accuracy and control of more sophisticated systems. 3. Double entry system. This is the most common and accurate method of recording financial transactions. Each transaction affects two accounts. One account is debited and the other is credited. This system helps ensure the accuracy and balance of financial statements. 4. Integrated eyes. Modern systems are typically integrated, meaning they link various departments of an organization. For example, sales data might automatically update the inventory, and production data may update financial reports. This helps streamline operations, reduces errors, and saves time. 5. Cloud-based eyes. Many companies now use cloud-based accounting systems, such as QuickBooks Online or Xero, which allow access from anywhere and offer real-time data and scalability. Benefits of an accounting information system. 1. Increased efficiency. AI automates repetitive tasks, such as recording transactions, which saves time and reduces the potential for human error. 2. Accuracy and consistency. An automated system reduces the likelihood of mistakes, ensuring that financial data is accurate and consistent across reports. 3. Timely business leaders can access up-to-date financial information and make quick, informed decisions. 4. Compliance and reporting. NICE helps companies comply with regulations like tax laws, financial reporting requirements, and audit procedures, reducing the risk of penalties and legal issues. 5. Better financial control. The internal controls built into NICE prevent fraud, minimize the risk of errors, and provide transparency in financial transactions. 6. Scalability. As a business grows, the eyes can be expanded to handle increased transaction volumes, more users, and new features. Challenges of an accounting information system. 1. Initial costs. Implementing NICE can be expensive, especially for smaller businesses. There are costs for software, hardware, training, and maintenance. 2. Data security. Since an IaaS contains sensitive financial data, protecting it from hacking, cyber attacks, and unauthorized access is essential. 3. Complexity. Some AISs, especially enterprise-level systems, can be complex and require specialized knowledge to operate effectively. Employee training is essential to avoid costly mistakes. For system downtime, like any technology, an IaaS can experience system failures or downtime. A backup plan and disaster recovery strategy are essential to avoid losing data and financial reports.